What's going on, guys? Hope everybody's having a great day wherever you are. We're going to be taking a look at Bitcoin. We're going to be talking about the scenarios that we've been looking at for the past couple of months and actually has been playing out very well over the last couple of weeks here. Now, keep in mind, these strategies that we've been actually speaking of have been in making for almost since August. So these are macro scale time frames that we're actually talking about here, 4 months in the making. And it actually has played out very nicely into where we were noting prices might come down to. Now, again, I'm no genie. I can't predict the future of what's going to be happening with price, but we can use strategies to indicate what the market might be doing and using those probabilities to have a better outcome of placing our trades off of. If you don't do that, then likely you're just gambling into these markets without any leeway or guidance of what could be possibly happening here. And that's what quant trading is. Quant trading is giving you the edge of more than a 50%, more than a coin flip, to try to understand where the markets might be heading and hedging your position, and also preparing your trades for the possible outcome. Now, keep in mind, we're creatures of repetition, and what we like to do when it comes to quant trading is to be consistent. Consistency is very important because it's consistency that allows us to win over a long period of time. You're going to be having losses in this market, but it's basically ensuring that your strategy is successful, that you have a 70% outcome out of the trades that you do take in that strategy, meaning you're going to have a positive equity curve going straight forward. Okay, with that being said, guys, what we're looking for on the oscillators, we basically were putting a lower high, as you guys can see here. Okay, lower high being put on the oscillators, while on price action you were actually putting in higher lows. Higher highs. My apologies. With that being said, what does that note? Well, that notes basically exhaustion from the bull sides. And because exhaustion is coming in from the bull sides, oscillator noting that momentum is weakening, we are likely looking for a correction here. Now, this basically notes bearish divergence, meaning a trend change in direction of price action, meaning bears are more likely to take over coming in at these key levels. Now, the weird thing with this market did is that after we did see that oscillator with the lower high and a higher high on price action, the market did something phenomenally well here, and putting the bulls on the wrong side of the trade here, traders on the wrong side, I should say. We can see here, right, that look, we just put in a higher high. Price action came back close to those targets of around $120,000 area, thinking that, look, maybe market might actually start breaking new all-time highs, but that's not what actually happened. We started a downtrend, putting in what looks like here at this point, okay, a lower low, and with that, then you have the momentum opening up for the bears, okay, and it started shifting to the downside. Now, currently, we are sitting at $91,000. The likely scenario we're looking at is testing this key area of yellow line here that we have put our resistance line, which once was a support area for a little while, as you guys can see from here, right? You can see here for a little while, since coming in, it was acting as resistance right here, okay, then turned into what was now support, okay, for a bit, July into September, October. But since then, we've fallen below that, and now likely is going to be acting as a resistance area for the bulls to get above, around the 108, 109 area. Now, if that becomes the lower high, the likely outcome is we're flushing back down, likely to 72 area. Now, again, we've tested this area a few times here in the past, and likely scenarios that the more you test it, the likely you actually break that floor. Now, I'm not going to say right away that's what's going to be happening is we're going to head straight down to $72,000. No. Even though downside pressure is there, right? Because if we look at the EMAs, right? If we look at the EMAs, guys. If we look at the EMAs, we can see on the 3-day, okay, we go to the 3-day right here. We look at the 3-day, we can see that you have the EMAs crossing to the downside. You have the 55-day moving averages and the 14-day moving averages. But if you go to the daily, it's actually telling a more bigger picture, a more harsher picture, where you have the 55 and the 200 EMA just crossing to the downside, giving you a death cross, okay, that everybody has actually been talking about. Everybody in their mother's basement. Now, with that being said, guys, that bearish cross, okay, are usually lagging indicators. But something important actually happened here is the rejection off of the EMAs that occurred here. You can see here the rejection and then a complete downside pressure, as we can see from here. Again, oscillators completely showing the momentum coming down. Okay, resetting. Now the favor of the pressure is in the bearish side. So again, what we're looking for is a retest bounce to likely above 100, overextension, thinking that the market is actually turning around above 108, because that will be the critical area, guys. This will be the critical area where this is going to be happening. Now, this is going to take some time to actually play out. Markets, this is a macro lookout, so give it some time. But that is the key area that the bulls, if are going to give this a shot, turn more than an actual bounce, will be that 108, 109 area to get actually above. And then we can actually reassess it from there and we look back into it and see what is actually going to likely happen in this scenario.